Ben ritrovati, siamo di nuovo sul floor del New York Stock Exchange, giornata di ribassi per gli indici di borsa americani, ribassi tanto attesi da tanti analisti tecnici. Ne parliamo con il mio ospite qui sul floor che è Otto, che è Designated Market Makers per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back again.
So Mark, we are down. It's definitely the worst day so far for the S&P 500 in 2012. We haven't seen the Standard & Poor's 500 down 1% in 46 days. So could be it?
Well, technical analysis has been calling a pullback or some sort of downtrend for the last couple of weeks. So if you call sell, 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 eventually it's going to happen. Whether or not there's going to be follow through today, we're going to have to see. It seems as though the GDP numbers came out from the Eurozone. They were down 0.03%, which actually was in line with expectations. However, I think Thursday's deadline with Greece again, here we are with Greece again, for the private sector to either cooperate or not cooperate, and how that's all going to go through it has yet to be seen. And I think it's got a lot of people nervous because out of 350 billion euros worth of debt, that would reduce their debt by 100 billion euros. So it's actually very significant. However, all these deadlines when it comes to Greece keep tumbling backwards. I feel like they're almost like they're in a race and they're jumping hurdles, and they keep having more and more hurdles to get over. So.
Yeah, sometimes they are not really final deadline.
Absolutely.
And you have noticed that also all the ADRs, like ADRs banks here at the stock exchange, they are performing pretty poorly today, probably in anticipation.
Absolutely. I track all the Eurozone financial ADRs, so they're shares that convert into ordinary shares. So at 11:30 when the European markets close, these stocks will actually continue to trade here. A lot of these stocks are actually down approximately 5 to 7%. However, when you look at the Greek ADRs, they're actually up on the day, 3 to 4%. So it's sort of a tell sign that people are anticipating that they will get over that next hurdle on Thursday. So it'll be interesting to see how that plays out.
That's actually good news. So now going back to today, market is choosing to go back down in a day that really we don't have much going on here in United States. But from tomorrow until Friday, we're going to have a lot of new indications from the economy. Of course, the focus will be on the job numbers on Friday, but tomorrow we're going to have some indication from the private sector, like employment in the private sector. What do you anticipate?
Well, it's, the employment numbers, everyone's been very speculative of them. These numbers, everyone's saying, there are hundreds of thousands, and in some cases people are projecting even over 1 million people have left the workforce. So I think they've been watching it with a very speculative eye. However, they keep meeting their forecasts and jumping over their hurdles each time. So it'll be interesting now. It seems as though there's a shift of momentum in the market. One thing that is true is the fact that there are fewer people participating in the rallies going higher, and it seems as though there's more down volume than up volume, which indicates the fact that there are several stocks in each index, whether it be the Dow or the S&P 500, that are more or less holding those indexes higher. So right now, the S&P is at 1346. We're actually sitting right on a doorstep of a level. 1348 would be upside resistance from now, and then 1358, downside 1341, and then 1337. One thing that I am seeing, though, is the VIX is actually climbing. So that's a barometer of fear in the market. That right there you could actually put your finger on. And the fact that it's actually trading up near $21 right now, it's up 17% on the day, it sort of is a tell sign that there is some fear out there.
And actually this could be kind of good news because as you were saying, a lot of technical analysts, they were anticipating, they were actually waiting for this moment to arrive. So a pullback, so a lot of money that has been in the sideline, they can actually come back into the market. A lot of investors have been waiting, and so we might see a stronger rally supported by volumes.
Absolutely. It's unhealthy for the market to just steadily keep climbing, especially if there's no volume to support it. So to see this type of reaction, you're right, it truly will benefit people who have missed the rally. They get a chance to get involved and hopefully support going forward. However, if this continuing situation continues to deteriorate in the Eurozone, well, there's other things also going on in the world. So China's growth forecast was reduced to an 8-year low. So that's something that's a sell trigger or a signal to people that things are not easy going global The other thing is the situation with the Iranian nuclear facilities. Is Israel actually going to strike Iran? And that's going to have more consequences than just global economy, obviously. So that part of the world is definitely sensitive in a heated situation. So there are several different fronts that we're looking at right now. And I think that everyone's starting to pay heed to that, and the VIX is actually an excellent indicator of that.
On a different note, are you following the Super Tuesday? Do you think that if we finally will have soon, hopefully, a candidate for the Republican Party, we will really start seeing a fight between the candidates? Do you think the market could be affected?
I really don't think that the market is going to pay focus to what's going on politically in the country. I think everyone realizes that it is an election year. Perhaps the jobless claims, a lot of people are saying it is an election year, so perhaps those numbers are looking pretty good right now for window dressing. However, that's a developing situation. People are going to sort of keep a watchful eye on. However, there are many other situations in the world that have more graver consequences.
And of course, until November, nothing will really change. So.
Absolutely. Jobless claims for Thursday, we're looking the same as last week, so 351,000 with the same range of 345,000 and 370,000 on the upside. So that's something that might be more closely scrutinized at this point in time. I'm going to be watching what's going to happen today at 11:30 when the Eurozone markets close. The FTSE, CAC, and DAC are obviously all down. FTSE was down just over 1.5%. The CAC and DAX are down over 2.5% at this point in time. So I'm actually going to keep an eye on those Eurozone financials. I'm going to keep an eye on what happens to the market after the Eurozone close, because we had resilience where we've actually rallied off the day's lows. However, a momentum shift would indicate the fact that, if we stay at these lows, that definitely could be a bearish indicator.
Thank you very much, Mark, for being with us.
Thank you. My pleasure.